Greetings and welcome to this week's episode of the Weekly Business Roundup with me, your host, Wadulo Arnold, on your national broadcaster, UBC TV. Thank you for tuning in, so let's get straight to business. The big stories this week, we examine the impact of World Bank suspension of new loans to Uganda. Airtel announces plans to publish a prospectus and float shares. Ministry of Finance has issued a 10-year national lottery operating license to Ituba, and President Biden signs an executive order restricting U.S. investments in some Chinese tech firms. For these and more, let's get started. Economic experts have weighed in on the World Bank statement on halting new loans to Uganda over the anti-LGBTQ law that was recently enacted by government of Uganda. On Wednesday, 9th of August, the World Bank, headquartered in Washington, USA, announced that it will pause project financing over what it termed as a controversial anti-LGBTQ law. Dennis Sigoa was at the Economic Policy Research Center.
The World Bank's suspension of new funding requests from Uganda has sparked a dialogue among economic experts about the consequences of the bank's decision on Uganda's development. Paul Lakuma, a research fellow at Makerere University's Economic Policy Research Center, considers the World Bank's decision as an overreaction and unnecessary.
For what I know about how some people work, is that they don't abandon what they have worked on for so long. Even if it has gone so wrong, there's always a scope for correcting, for self-correction and coming back to where you were before.
The ongoing discussions regarding the suspension of new loans from the World Bank to Uganda due to the enactment of the anti-LGBTQ law reflect the complex interplay between economic support, human rights concerns, and national development priorities.
So World Bank, of course, has been supporting us. Like you've said, we've been walking the journey together. What I know is like we've been receiving loans. Yeah. And the economy has been choking from loans. How are the World Bank loans? Are they favorable for us?
Okay. The loans have been concessional. Right. To the best of my understanding, they have a long, considerably long grace period. I think I'm told it's 12 years before you start paying, and the interest rates are much lower than what is offered by anyone else in the market. So they are loans, yes, but very soft loans, yeah, compared to the other creditors. Mm-hmm. Yeah. But every creditor in the basket is important because no one creditor can justify the deficit we have in terms of resources.
Lakuma emphasizes the long-standing relationship between Uganda and the World Bank spanning 6 decades and how it has contributed to key projects that are aimed at improving livelihoods and reducing poverty in the country.
The Ugandans or the citizens are very interested in this issue. So some people wonder, what are some of the projects that are maybe key or major that have been funded by the World Bank, and can we survive without them, or or can't we survive without them?
There are many projects World Bank is funding. USMID for the cities.
Yes.
The results are visible. You can see them. Good roads, good infrastructure for the new cities, for the secondary cities outside Kampala. UGIFT, you've heard of UGIFT?
Yes.
For secondary schools in every sub-county.
Yes.
Those are some of the recent ones. In the past, we have worked together on the poverty papers, where we worked together in reduction of poverty by half, from 50 to 25. Uganda is one of the few countries which achieved the Millennium Development Goals. And it was with, of course, the leadership of President Museveni, but we worked hand in hand with the World Bank.
President Yoweri Museveni issued a counter-statement rejecting international criticism of the anti-LGBTQ legislation. He defended the law as a necessary measure to prevent LGBTQ community from recruiting individuals. Despite the suspension of new loans, President Museveni remains confident that the country will continue to develop with or without external financial support. Dennis Igoa for the Business Roundup.
The Private Sector Foundation of Uganda and the Ministry of Gender, Labour and Social Development have launched the GROW project targeting all women in business. Speaking at the launch in Kampala, stakeholders say that the World Bank funded project is benchmarked on findings that women in Uganda require more targeted and affordable funding sources to boost their enterprises in a bid to spur economic growth with a balanced gender participation.
The World Bank and Uganda through Private Sector Foundation Uganda have unveiled a 5-year counterpart-funded grant of close to $217 million US targeting women entrepreneurs.
This is the largest project Uganda has ever received for women. And we are hoping that we can support women. The women that are not in PDM are the ones that we are looking at. They are above the PDM, but also they are below the medium and large women. And there are so many categories of women like that.
As of 2022, about 34% of women in sub-Saharan Africa have access to financial services, hindering the growth and sustainability of their businesses.
Because for a long time, one of the things that we've seen is that a lot of women are operating in the informal sector. Now, we also notice that if you make them formal, then they actually have access to better credit, better facilities, better intervention.
Private Sector Foundation Uganda intends to work with about 8 commercial banks in Uganda to help avail the funds to the targeted beneficiaries. To benefit from this fund, women in their various business sizes are being called upon to join unrecognizable women-based associations affiliated to the Private Sector Foundation of Uganda.
This GROW project is aiming at giving a lower interest rate in comparison to regular interests within the commercial banks. And the whole aim is to actually de-risk the women, because most bankers think women are higher risk. They manage smaller businesses which are difficult to follow up and to manage. So it will help the women to be able to access this money from the banks, because now banks will be comfortable to lend to them, knowing that there's somebody else who is supporting, who is de-risking them.
The GROW Project Fund joins other public credit funds like Parish Development Model, Emioga, Small Business Recovery Fund, and the Women Empowerment Program, of which women are also beneficiaries. Penelope Akamwesiga, Wadulo Mark Arnold, UBC News.
As a way of ensuring compliance in the Social Security savings within the labour space, the National Social Security Fund has embarked on training local government leaders and labour inspectors from across the country. During the training in Kampala, the need for social security protection in order to collectively increase economic development was emphasized.
Uganda has a workforce of about 16 million. However, even with this number, the social security savings culture is still lacking. Minister Betty Amongi wants more compliance with the labour laws.
The workers who are undertaking road construction work in areas related to big construction companies, mining industry, oil and gas, all those you are supposed to ensure that their contract, we are going to meet the people from oil and gas soon, but we meet them, we tell them what to do, but enforcement is with you, the labour inspectors, together with the team of NSSF. You are supposed to ensure that the premises comply with labour laws, and some of the labour laws are people have occupational safety and health standards in those workplaces, working hours, payment of wages, allowing unions to form. Some of those areas, they don't allow workers to form unions, and yet unions are important even to ensure that NSSF is paid.
Enforcing compliance is one of the main reasons for the sensitization and training of local government leaders and labour inspectors on the new provisions of the NSSF Act 2023.
The government has the responsibility, and I take care of people as they grow older. So if we do not take care of and ensure they're saving now, it means that we are still going to have to take care of them in their older age. So as collectively, we have that responsibility as a government. Secondly, savings are good for an economy because it drives national economy. So engaging with the national leaders kind of can help them understand that savings are not just personal, the whole it actually has national implications if we do it together. And I believe they actually appreciate that we've done that. What we're doing that as NSSF now, we're not going to leave any stone unturned. We will not leave any person who we think can support us, help us, not reach them. At the minimum, let's reach them and see what comes out of it.
To advance accountability of the workforce in the country and ensure reliable social security savings, Amongi emphasizes the need for employers to have written contracts of their employees.
In fact, every time you enter a workplace, you must ask for the contract, because it is that contract that is supposed to embed the NSSF contribution. It must stipulate the NSSF contribution and other terms of condition, terms and condition of service. So your role is to ensure that every worker has a written contract.
The NSSF Act 2023 introduced mandatory contributions by all workers, regardless of the size of enterprises or employee numbers. Marion Awori, UBC News.
Government through the Ministry of Finance has issued a 10-year national lottery operating license to Ituba Uganda Limited, owned by both South African and Ugandan nationals. The National Lottery is poised to contribute substantially to the GDP of Uganda.
The purpose of the National Lottery is to raise government revenue, which shall be a percentage of the gross sales, including gaming tax of 87 billion shillings and non-tax revenue of about 60 billion shillings annually.
To raise the funds for good causes and increase the revenue base. And you know, as your Minister for Finance, that's my biggest headache. To raise sufficient money to cater for all the needs of people in Uganda is a big task. So I'm welcoming you to be part of my partners in that mission.
At its core, the National Lottery represents a preferable alternative to traditional revenue generation methods. However, there is an emphasis on responsible gaming.
Yes, the serious challenge we have is to make sure that all these gaming activities do not harm our citizens. So this is what we mean by responsible gaming. We want to say, if you participate in these games, do it voluntarily but also carefully. Be mindful of the fact that you should not take too much time in games instead of working.
Engaging citizens through their voluntary participation creates a means of funding government and community services that is both economically sound and socially.
So it took us more or less, we did a due diligence, and within about a year we knew, and we did a lot of spade work to understand the customer profile and to also understand whether the games will be acceptable and to localize the games.
They've had a significant impact on activities that would normally should be funded by government, but because of budgetary constraints, government is also hard up funding all different kinds of sectors. So things like sports, as you know, we've had issues of funding our sportsmen and women in competitions.
The National Lottery is first of its kind in Uganda and will create over 1,700 jobs for Ugandans.
There is a problem that does not allow me to sleep comfortably. We are offloading 700,000 youth on the labor market every year.
Dennis Igoa and Juman Samba for UBC Business.
Financial technologies are playing a big role in driving digital financial services and inclusion. This is despite concerns of data breaches that threaten to impede the sector's gains. The 6th Annual Bankers Association Conference, slated for the 14th and 15th of this month, will take stock of the contribution of fintechs in Uganda's economy.
So as mentioned, the theme is really around the trends and innovation in the fintech space and the changing face of banking and the financial services. What the conference intends to really focus on this year is taking stock of the contributions of the financial techs or fintechs and the other players in the financial ecosystem, including mobile network operators, and the role they make towards, the role they play towards the growth and transformation of banking and financial services. Really about how fintechs are advancing our financial inclusion.
Breaches and point of compromise where at central points where this data is seen. Some of these we'll be speaking to at the conference. The UCC Director for Regulation will be at the conference, and it's one of the areas she's going to tackle. I think when there are points of weaknesses, it just means we must work harder. Those fraudsters, that information is then given to fraudsters who then call you. Many of our relatives in the village have fallen victim, and then they give a password or code, and the money is swiped and so on. And that's why you have seen the industry stepping up campaign. You have seen the Vera Steady and many other programs to create awareness and generate as much awareness as possible.
Yes, the issue of receiving money and then a phone call comes. It's been quite an issue. And of course, then what we tend to do is to look at where is the source of the money. Was it a deposit from an agent? Was it a banked wallet? Was it an international remittance, out of Uganda coming into the country? So, and of course, that really then enables us to quickly, if it's, for example, an agent deposit, we will then need to go and try to check. And as I speak, we have a team on ground that is actively monitoring the quality, training our agents in terms of the do's and the don'ts, because sometimes it could be that number being picked from the transaction register at the agent outlet. We have an agent app that we are trying to encourage our agents to actually opt for, as opposed to physically taking note of these transactions. But the transaction book is one of the sources, definitely.
In our corporate news, Airtel Uganda has announced its intention to proceed with an initial public offer of 8 million Ugandan shillings existing ordinary shares of the company, representing 20% of the company's total worth in Uganda.
The intention to publish a prospectus and float shares on the main investment market segment on the Uganda Securities Exchange comes at a time when the telco continues to register significant revenue growth. For the year ended 31st December 2022, Airtel Uganda registered revenues of 1.594 trillion shillings and a net income of 326 billion shillings.
So we feel we are very optimistic about the Ugandan market, our customers, and who will be majorly investing in us. So we don't see any risk at this moment. So if you really look at future, these qualities of Airtel Uganda for bringing the latest technology, being very customer centric, and building on technology is the biggest support that we can. These are the levers that we can build on to be very competitive in the market.
Following the completion of the offer and upon approval by the relevant authorities, Airtel will apply for the admission of its issued share capital to the main investment market segment of the Uganda Securities Exchange. The offer and subsequent listing seeks to enhance Airtel Uganda's profile across the continent.
Where we work, we share. If you look at the number of circles, the plethora of circles that now have come in handy, chamas, something that has flowed across the boundaries. I think this is a time for especially the young people to appreciate not just savings but also investments. I read an article where when we are growing up, we emphasize saving. As parents, and I'm a parent of young adults, that's what we say. But because of our limitation in terms of appreciating equities, and probably some of the experiences that we've had, I think we get shy, and finally what you see is loads and loads of cross-border funds coming in to invest, and then we watch.
We are very excited to soon be in a position to share the ownership of our business with fellow Ugandans as well as outside Uganda investors. The size of the offering is in keeping with the regulatory requirements of the USE and a demonstration of our commitment to supporting the development of the Ugandan capital markets.
Notably, the offer gives preference to Ugandan investors, including the company's customers. Currently, Airtel Uganda has more than 14.3 million active subscribers. Dennis Igoa for UBC Business.
In the quest to improve housing conditions for public servants, Access Financial Services have spread its wings to Jinja City. While opening the branch, Edgar Bampata, the head of sales, said that they are focused on extending affordable microcredits to qualifying Ugandans in the public sector to improve their livelihoods.
Gathering enough funds for putting up decent accommodation by many civil servants is an uphill task, given the many competing household demands. It's on this backdrop that Access Financial Services, a microfinance institution, is spreading its wings to more districts across the country.
We conducted a research and we discovered that there was a gap in terms of public servants accessing credit. Despite other sectors, other components of the society needing credit, Access Financial Services identified the homestead as the key factor to the other, as the foundation to the development, other development needs. That's the reason we decided to enable the public servant first acquire a homestead, first develop themselves on that front, and then they will be able to access any other need they want, but with a stable living environment.
Uganda's financial industry has been on the spotlight due to the lengthy processes and bureaucratic tendencies for acquiring loans. Making life easier for public servants is a top priority for Access Financial Services, whose loan approval and disbursement for up to Uganda shillings 30 million takes a maximum of 48 hours.
And the civil servant has always been on the lower side when it comes to accessing financial services. The processes have always been quite big. One would ask you for quite a number of tools that you actually may not have. And in Access, what makes a difference is because we have listed a few of the items that would feel do count for a customer to be able to access service. For example, if one is on a payroll, why would one probably ask for another collateral as one of the requirements to access services?
Microfinance institutions continue to play a transformative role in boosting incomes across all fronts. With 12 physical branches spread across the country, the financial institution is buoyant about its long-term benefits to the underserved communities.
And much as we serve the public servants, we do focus on improving livelihoods. Our agenda goes towards improving homesteads, enabling public servants to put up shelter, enabling public servants to put up homes, and all the needs that come with that part of the development need.
Tier 4 institutions remain a safe haven that promotes financial inclusion in the economy and aids in social and economic transformation.
When I first heard about climate change, I was filled with fear and rage, pointing at each and every cause and mostly disappointed in humanity. How could we be so greedy and selfish? But as I studied more and I learned something I wish you never forget. Love is the most powerful renewable resource needed to overcome climate change. Science is good but limited. If only humans understood that we are under God, that we are part of nature and depend on nature, but also have a responsibility under God to care for God's creation. And by God I mean Christ, on his behalf. Together we are unstoppable. Indeed, love never fails. Always ask yourself these questions.
A new executive order signed by President Biden will place restrictions on U.S. investments in some Chinese high-tech companies. The White House argues that the measures are necessary for national security reasons, but many analysts say that it's the latest in a series of measures designed to hold back China to give U.S. firms an advantage.
The new executive order will limit the ability of U.S. venture capital firms and private equity companies to invest in parts of China's high-tech sector, including AI, advanced semiconductors, and quantum computing. The Biden administration cites national security concerns as the reason behind the new restrictions. China's Ministry of Foreign Affairs objects, saying in part, China is strongly dissatisfied with and firmly opposed to the U.S.'s insistence on introducing restrictions on investment in China and has lodged stern representations with the U.S. side. Under the guise of national security, the United States restricts American companies' investment in China and engages in pan-security and pan-politicization. Its real purpose is to deprive China of its right to develop and safeguard its own hegemony and self-interest. This is naked economic coercion and technological bullying. In a trip to China last month, the U.S. Treasury Secretary tried to downplay the impact of the investment restrictions.
It would be highly targeted and clearly directed narrowly at a few sectors where we have specific national security concerns. I want to allay their fears that we would do something that would have broad-based impacts on the Chinese economy. That's not the case. That's not the intention.
Some analysts see the new restrictions as the latest move in a larger effort by the U.S. to hold back China's economic development and give American firms an unfair advantage. The executive order was announced the same day Biden was touting the U.S. semiconductor industry.
All over the country, semiconductor companies are investing in record billions of dollars. By the way, you know how much has been committed in the Chips and Science Act to be invested in America? $230 billion.
U.S. venture capital investment in China has already plummeted in recent years, and some investors warn this could be a, quote, major blow to Chinese tech startups and U.S. venture capital firms. But analysts note that similar measures taken in the past have failed to stop China's development.
History has shown that these measures have all failed. It's not going to stop China from developing these technologies. I mean, China has its own history of being sanctioned by other countries in technology, but the outcome is exact contrary.
The executive order must now go through a 45-day public comment period. Many U.S. companies are expected to push for exemptions and modifications to the new restrictions. Jim Spellman, CGTN, Washington.
Thinking about the future doesn't stop with us or our old age, but with the coming generations too. With climate change awareness messages passing around, how informed are your children about climate change? Thank you for being a part of this week's episode of the Weekly Business Roundup with me, your host, Wadulo Mark Arnold. Catch us on the next, same time, same place. From the team, we must say goodbye.
UBC, inspiring Uganda.